8 distribution days, a market in correction, and somehow a diagnostics stock just doubled in 8 weeks. Gainster found it, and the drive score says it's not done yet. Here's what you need to know about the stock market today. This is your drive score update for July 24th, 2026 US Eastern Time. Market overview. Let's talk about the elephant in the room. We're in a confirmed market correction with 8 distribution days stacked up and no follow-through day in sight. The drive distribution tells the story. Only one stock in the green zone above 80, while 4 sit in yellow territory. That's a very selective market. This is not the time to be swinging aggressively. Keep your position sizes small, your stops tight, and let the market prove itself before you commit capital. Healthcare names are the quiet survivors here, but even they deserve respect, not blind conviction. If daily drive score breakdowns help you navigate corrections like this, subscribe so you never miss an update. Today's market moving news. Big pharma news first. Eli Lilly's Retatrutide just scored 2 more Phase III wins, putting it on track for 2027 filing. This obesity drug pipeline is becoming a conveyor belt of catalysts for LLY. Every positive data readout builds the moat wider, and competitors are watching nervously. This is the kind of pipeline depth that supports a premium valuation even in choppy markets. But not everything is rosy for Lilly. Novo Nordisk is seeking a preliminary injunction against Lilly's weight loss advertising. This legal battle highlights just how fierce the obesity drug war has become. While it's unlikely to derail Lilly's business, it could create headline noise and short-term volatility. Keep an eye on the court timeline if you're watching LLY for an entry. And rounding out the LA trifecta, analysts at 24/7 Wall Street are calling Eli Lilly a top growth stock for 2026. With multiple catalysts stacking up across obesity, diabetes, and immunology, the fundamental story keeps getting richer. The question is whether the chart can keep pace with the narrative, and we'll look at that setup in the spotlights. Stock spotlights. First up, CH Robinson Worldwide, ticker CHRW, drive score 70 out of 100 with a relative strength of 87. It's carving out a textbook cup with handle in the freight and logistics space. The cup traced from 190 down to 150 and recovered back to 195. The handle pulled back to about 176. Breakout level sits right at $195 in a correction. Logistics stocks can be early movers when sentiment shifts. Watch this one closely. Johnson & Johnson, ticker J&J, drive score 60, relative strength 80, another cup with handle, this time in big pharma. The cup carved from 251 down to 220 and climbed back to 269. Handle dipped to about 245. The breakout trigger is 269.43. J&J is a defensive heavyweight, and the fact that it's building a constructive base during a correction tells you institutions are quietly accumulating. Not flashy, but reliable. Eli Lilly, ticker LLY, drive score 60, relative strength 76. We just covered 3 news stories on this name, so let's look at the chart. LLY has a wide cup from 1112 down to 850 and back up to 1183. Handle pullback to 1079, breakout above 1183. The pattern is constructive, but the RS at 76 tells you it's lagging some peers despite the headline dominance. Let the chart confirm the story. Cardinal Health, ticker CAH, drive score 60, relative strength 74 cup with handle in the medical distribution space. The cup ran from 231 down to 180 and recovered to 243. Handle dipped to 220, breakout level is 243.21. CAH is a steady operator in a recession-resilient corner of healthcare. Not exciting, but in a correction. Boring can be beautiful. If you're finding value in these drive score breakdowns, smash that like button. It helps more traders discover this channel. Today's top pick. Today's number 1 pick and the best stock to buy now in July 2026 is Twist Bioscience, ticker TWST with a drive score of 90 out of 100. This is a coiled spring that already launched once TWST rocketed 103% in just 8 weeks, from $49 to nearly $100. Now it's catching its breath in a tight 9.6% flag pullback, which is exactly what you want to see after an explosive run. The power play pattern means this stock doesn't need a traditional base. Momentum is doing the heavy lifting in the medical diagnostics and research space. TWST is showing the kind of relative strength at 94 that screams institutional sponsorship. The risk, we're in a correction. Even the strongest stocks can get dragged down if selling pressure intensifies across the board.
Are you holding any healthcare names through this correction or staying in cash? Drop your strategy in the comments.
Honorable mentions. Here's a quick scan of the remaining names on our watch list, with only 5 stocks making the cut today. This is a tight list, and that's the correction talking. Notice the healthcare theme dominating CHRW is the lone non-healthcare name here, standing out in freight and logistics. When the market eventually flashes a follow-through day, these survivors could be your first movers. Keep them on your radar.
Here's the bigger picture. Corrections feel painful, but they're the market's way of building the launch pad for the next move. The stocks that hold their patterns through the selling are telling you something about institutional conviction. Healthcare is whispering right now, and the drive score is helping us listen. Tomorrow, watch whether those distribution days keep piling up or if we finally get a relief bounce. That's when the real opportunities reveal themselves. This has been Gainster. Stay disciplined, stay patient, and we'll see you next time.